Hi, my name's Andrew. Thank you for visiting my YouTube channel. In this video, we're going to take a look at the 10 questions an angel investor will ask about your startup. A little bit about myself. I'm a fundraising strategist with 15 years of experience in high-end real estate sales and marketing, spanning Canada, Dubai, and the Caribbean. And over the last 2 years on Fiverr, I've assisted over 260 clients with startup fundraising, pitch deck refinement, investor outreach strategies, and custom investor databases. I also serve as an advisor to a New York private equity firm with funding commitments of $10 billion. This group diversifies across multiple sectors, including income-producing real estate, and engages in debt or equity financing ranging from $10 million to $100 million for each project. You can learn a little bit more about my services by clicking my Fiverr link below. Number one, what problem are you solving? So the answer to this is describe the specific problem your startup addresses and focus on the pain points and the market gaps. What most people forget is investors want to see a well-researched problem. Most founders fail to demonstrate a real demand for a solution, and I find this in a lot of pitch decks. If you're doing your pitch deck, you're going to have a problem slide and a solution slide. 3 bullet points is probably fine, and then you should have 3 corresponding solutions that respond to the problem slide. Number 2, what is your unique value proposition? So the answer is explain how your product or service uniquely solves the problem, highlighting key differentiators. And what most people forget is founders often overlook how their solution stands out against existing alternatives. So most people, when they're launching a startup, have to have a comparable. Obviously, if you're going to get into a business, unless you're 100% unique, and that's very hard. There's not that many unicorns out there in the world today. Most of the time you're trying to improve on someone else's business, and knowing that there is a significant market for it. So you're going to have to basically prove to people how that you stand out against the current businesses. 3, who is your target market and how big it is? The answer is define your target audience with an estimate the total addressable market. And what most people forget is ensure that you show credible market research. Many skip proving there's a willingness to pay for the product as well. I would say probably about 80% of the pitch decks I receive do not have credible market research as far as what their target is. They do have a number, but it's just one that's really picked out of a broader set of the market. So they have to drill down a little bit better to show how many people are actually willing to pay for your product. Number 4, what is your business model? So the answer to that is explain how you generate revenue. For example, is it going to be subscription, licensing, etc.? It could be product. What do most people forget? Investors need clarity on sustainability and how scalable the model is. So basically, almost every investor is going to want to see the scale of the particular product or service. 5, what's your traction so far? Really important one. You need to provide metrics on users, growth or revenue, show progress since the launch. What do most people forget? Most founders fail to show specific growth milestones and focus only on future projections. In reality, an investor is going to want to see, 1, have you made some money on it yet? Have you got some subscribers? Even subscribers that aren't paying is something that is of interest, because there could be levels in your model that show the next level is something you pay for. It works very much the same way when you see websites that allow you to take a look at certain information, but then the next step is a subscription basis. So that's something that's really key, and again, show some milestones and don't just focus on the future projections. What is your competitive advantage? This is another important one. Detail your edge over competitors, whether it's technology, team, or market access. What do most people forget? Most people neglect to address how they maintain this advantage as the market evolves. Remember, your competitors are smart as well, and ones that are already up and running, is it just very easy for them to take what you've added and add it to their business model? Who are the key members of your team? This is really important, and I've mentioned it in other Videos. Investors invest in teams, not products. So introduce your core team with their relevant experience. What do most people forget? Emphasize why your team is qualified to execute the vision, not just their resumes. And also, when you do your team slide, ideally 1, 2, 3 at most. Do not put 6 people on your team slide, no matter what they contribute to the company. Really, they want to see the founders and the co-founders. Number 8, how will you use the funds? And to be honest, many pitch decks I receive do not even have a slide on what their funding requirements are, which I'm quite surprised on. But for this one, it's the answers. Be specific about how the capital will be allocated. For example, marketing, research and development, hiring. What most people forget, don't just list expenses, explain how these investments will lead to growth. One thing to keep in mind is most investors do not want to fund your marketing. If you're asking for $1 million, do not put that it's used for marketing to grow your subscriber base. They want to see that it is in research and development, hiring key personnel, acquiring new equipment that's going to help you scale, not just that it's going to help you run more ads and marketing. And number 9, what are your financial projections? This is again probably one of the slides that is missing from most people's pitch decks. If you don't have projections, then your presentation isn't a pitch deck, it's just a presentation. The answer to this is provide realistic projections for revenue, expenses, and profitability. What most people forget is most projections are overly optimistic. Ensure that they're data-backed and credible. Again, one of the most common ones is I see people that are making these outrageous projections, and especially ones that aren't even making money right now. So it's really hard to believe that all of a sudden a light bulb's going to go off and they're going to have $2 million in revenue in 3-4 years. Financial projections should come off the back of your business plan. You always create a pitch deck after the business plan because there's no other way to do it. So if you haven't created a business plan, if you don't have your financials done, if you can't do them, find somebody who can. But it should be always coming on the back of your business plan. And number 10, what is your exit strategy? This is really a simple one. You want to explain how investors can expect returns. Is it through acquisition or IPO? What most people forget is not addressing the timeline or potential buyers is a common mistake. So following this is how do you reach angel investors? Well, I have an exclusive database of angel groups in the USA. And what is an angel group? It's really simple. An angel group is a collection of firms, angel investors that are part of the firm. For example, they may have 20, 50, 100, 200 sometimes, and they're one of the best ways to find angel investors. The second best way is probably just doing it through using LinkedIn prospecting, for example. But the best way is go through angel groups. So I have a database, an exclusive database of 140 angel groups across the USA, and they've collectively funded over 7,000 startups in recent years. What makes it unique? Well, the database offers detailed descriptions of each group, including their sectors of interest, websites, and contact details. It's an invaluable tool for startups looking to connect with investors who have a proven track record of funding new ventures. You don't have to do all the research. I've already done it for you. I've vetted the list. It's fantastic. It's probably the most popular database that I have in my total library of about 400,000 contacts. This is 140 that will get you really working fast to making connections if you're looking to raise funds. The value proposition is this resource streamlines access to funding by connecting entrepreneurs directly to targeted angel groups, increasing the chances of securing investment. For more information on my databases and services, click the Fiverr link below. Thank you for watching. Please like, share, and subscribe.